Hey guys, what's up? So, big news today. Circle, the stablecoin company, announced earlier today that they are acquiring Axelar. For those of you who don't know what Axelar is a cross chain interoperability protocol. In simple words, it basically allows you to move your tokens from one blockchain to another. Now, the acquisition itself is not the news. The big news is that in this acquisition, Circle will be acquiring the Interop Labs, which is basically the founding team, and the IP or the intellectual property, which basically means the software that these guys built. And what is not part of this acquisition is the protocol itself, the network, and most importantly, the Axelar token. Now, this has created kind of a ruckus in the market today, and a lot of big names in crypto are calling it out for what it is, basically dumping on token holders. But it's a very important lesson because what I want to talk about today is that when we buy these tokens and we are trying to apply some kind of fundamental valuation models on them, trying to value them like equities, it all comes down to this litmus test. In the event of a transaction, does the value flow back to the token holder or not? And in this instance, it's quite clear that none of the value of this acquisition, the money, the proceeds of this sale, will not flow to the token holders. And so all they are stuck with is a worthless token with no utility behind it. And for the longest time, we have these KOLs in crypto who want us to think differently about utility tokens, which is basically these projects which run some kind of a software or an application, and they have a token with meme coins, right? Which is basically just a token and they have nothing behind it. It's just a community. Right, and rightly so, right? Because it was quite obvious that many of these utility tokens, at least that's the hope. Like when I own Ethereum or when I own Solana, the idea behind owning Ethereum or Solana or Monad or any other utility token is that when these blockchains will start making money, at some point in time, we will approach that escape velocity. And at that point, there will be massive adoption, there will be massive cash flows, and those cash flows will be captured through some kind of a token utility, so through some kind of a token flywheel, and increase the value of our investments, right? That's the whole purpose. But now it's quite clear with this acquisition, and this is not the only one, and I'll talk about others as well, where crypto M&A is essentially creating this very clear divide between the IP and the ownership of the underlying IP. And it's quite clear now that the so called utility tokens actually have served zero utility apart from namesake utility on things like governance and uh, staking rewards, for instance. Because think about it, if the token holders really had a governance right, should not a sale like this, which essentially puts the token holders in jeopardy, go through some kind of a governance process? Did it? No, it did not. So so this is what I wanted to discuss with you today, and I am going to now show you, I'm going to share my screen, and this is the announcement by Jeremy Allaire, who is the co-founder and CEO of Circle, which is a listed company on New York Stock Exchange. And he calls out, he's very specific about it, because read his words, guys. He says that today Circle has announced the signing of an agreement to acquire Interop Labs team and IP, with the deal expected to close in early 2026, right? And I'll go back further, because there was also, I'll come to this chart in a second, but look at this, right? Let me find it for you. Yes, there you go. Look at this. So this is the official announcement from Circle's Twitter handle, and they say the Axelar network, the foundation, and AXL token are not part of this acquisition and will continue to operate independently. Now, think about it. If the founding team itself is gone, who's going to run the network? if the IP itself was owned by Circle, what rights does the foundation now have, or the network now have? What are they securing? And so it's very clear now with this transaction that it was never meant to benefit the token holders. And so now comes the most important question: why are we buying these utility tokens? What is the upside that we're looking at? In which case, all it becomes is a giant ponzi where for me to make money, there has to be a buyer on the other side who's willing to pay me, right? That's how all ponzi's work. And so this is what we are now seeing with tokens as well, because founders are willing to sell the IP. They own the controlling rights to the underlying software, and the token holders are being sold a dream that they have governance rights. What governance rights do AXL token holders have in this case? And I want you to look at the AXL chart as well. And if I just go broad and I show you the chart zoomed out, look at this chart, guys. Right. So at the top in the 2024 cycle, year end, early in 2024, and let me just change this to market cap. You will see that Axelar was valued at billions of dollars, and today it's less than 120 million. So it's basically lost 95% of its value from the top here. If we calculate it roughly 95% to be precise, 95.34%. So for a token now sitting at 120 million, not owning the underlying software, where do you think it'll go? I can bet you guys this is going to zero. And then my head started tingling, and I wanted to figure if there are other similar events that has happened before. And I found this tweet by Mason Nistrom. For those of you who don't know Mason Nistrom, he's a venture capitalist. Before that, he was a researcher at Mazari Crypto, and he pointed out that we continue to see precedent being set that when token projects are acquired, the token possesses zero value. Listen to his words carefully, guys. And this is a guy who spends his days and nights and evenings and afternoons analyzing tokens for a living. And he gives examples. He's giving three examples here, right? So there's Padre, which was acquired by Pump Fund recently. There's Vector, which was acquired by Coinbase, and then there's Axelar. And guys, in each of these cases, actually, with the exception of Padre, and I'll talk about Padre in a sec, but Vector.fun, guys, and I was doing some research on Vector.fun. Look at this, guys. This is the exact date, 20th of November, when the acquisition was announced by Coinbase. And look at how the chart performed before that. It was basically dead, right? And right on the day of the acquisition, you see this big, large candle. What would you call it? This is pure crime, guys, because insiders who were aware of the transaction, started bidding this up. They coordinated a pump with market makers, which probably got other, crypto traders, retail investors interested, who started bidding the tops, and then they dumped the chart. So not only um, did the Tensor token holders not receive anything from the proceeds of the Vector sale, but the insiders also ran a coordinated pump and dump. And this is extremely frightening because, when we go to CoinGecko and we look at all of these charts and we're thinking, hey, this is so awesome. I mean, I'm investing in the future of financial technology, XRP valued at, I don't know, like what, $116 billion. Solana valued at $72 billion. Check this out. I was having a conversation with Gemini earlier today, and I asked him, what if Solana Labs is acquired by Google or a large tech company or a Visa? What then? And and he says that will token holders get any of the upside? He was very clear. He said no. This is a critical distinction between a token and a share or an equity. A token holder has no claim on the proceeds. So if Solana Labs is sold for, let's say, a random number, say $10 billion, then sold token holders are legally entitled to $0. You do not own any share in Solana Labs. No dividends. You have no right to the company profits. There might be an indirect market impact, like the news might cause the token to pump, but the token holder has actually no right, right? And even staking, right? Staking, if you think about it, is basically you providing a service of helping secure the network, and you receive a fee for that. So that's not really dividend, because a lot of people think that staking is similar to investing in an equity and receiving dividends. No, it's not the same, guys. So I want to bring up now a few interesting thought leaders, what they were saying. First, Mike Dudas. Mike is again a very senior leader in the crypto space. He is a crypto investor. He's the GP at Sixth Man Ventures. Very active in this space. And he says he showed this chart of Axelar, and he shows these bumps in volume, and he says very nice, very organic Axelar token volume spike ahead of the Circle acquisition. Wonder who was exiting ahead of the token being abandoned. So guys, the same scene played out. What we saw in on the tensor token is exactly what has happened on the Axelar token. Look how it was dying all the way, and then suddenly these pumps happened when somebody sold a shit ton of tokens. And so again, this brought this has now created the situation where people don't know what they should put. There's another one from Tulip King, and he says that honestly, the first thing that Aave, Uniswap, Tensor, Axelar token holders should do is to issue a DAO vote to spend the entire treasury suing their counterparties in the labs and foundation teams. Get on the offensive here. And this is because there is this conversation that always that's ongoing, right? When a network becomes successful, who will accrue the fees? Right? Who owns the IP in the event of a transaction? Where are the proceeds heading to? These companies have raised literally billions of dollars from the crypto markets, from crypto investors, and they're not willing to share any of those proceeds with the network investors, and that's pathetic, guys. There's another tweet which is quite interesting, which is which comes from let me find it, from decentralized.ai, and he says that there is a tidal wave going on in our industry if you're paying attention. It was evident over Breakpoint and even more evident today. Most recent example is Circle acquiring Axelar, right? While the token holders captured none of the upside, effectively owning a meme coin and used as an exit liquidity for the founders and VC. And he talks about ownership coins, right? Which is the MetaDAO project. He talks about MetaDAO project. Now, what the MetaDAO project is doing is a novel experiment, and this novel experiment is called ownership coins. What this basically means is, instead of all of these tokens that you see today, which has literally no ownership, right? Or they don't own the underlying IP or the software being developed by the dev team, which is getting funded by your money. Ownership coins basically flip the script. And what an ownership coin basically does is, what an ownership coin basically does is it basically creates a decentralized autonomous organization, or a DAO, and the DAO owns the core IP of the software which is developed from the money which is funded by investors who buy the token of the project. And so suddenly now any decision around a strategic M&A no longer benefits only some insiders or some VCs. That money also flows into the hands of the token holders, and this is real governance. This is basically what the vision for on-chain tokens were, on-chain utility tokens was in the first place. So this is quite cool. Cool experiment. They also have a token, guys, and I would highly recommend that you explore it. And actually, let me show you some of the projects which launched on MetaDAO. And it's surprising that if you look at the MetaDAO launchpad, it is in a market which is completely DAO. MetaDAO tokens are actually doing quite well. Avicii is now up almost 25%. OmniPair is up 25%. It's up 130% over the last 30 days, up 25% today. So you can already see, and even the tokens which are down are barely down if you compare it to broader tokens. Then the reason this has happened is because none of these teams, and I'll give you examples, like Avicii is building a neobank, right? They're building a neobank. So all of that software that they're building, the core IP, is owned by the Avicii DAO. It's owned by the Avicii token holders. So if tomorrow, let's say Revolut or a Robinhood or a Coinbase want to acquire Avicii, it has to go through a governance vote, and the proceeds would go to the DAO, which eventually would go into the hands of the token holders. Unlike what has happened with Axelar. And it's surprising, and it's extremely disappointed, because when I was looking at Axelar, and I think there was another very interesting tweet. Let me see if I can find it for you guys. um, um, Let me see if it's somewhere around here, right? So yeah, there you go. Here's another one. Fijao, he's the head of content at Blockworks. He says that every crypto M&A that occurs worsens the marginal appetite for useless governance coins, as the risks widen to things that the marginal buyer didn't even really consider, right? So none of us thought none of us thought, when we were buying all of these utility coins with real with the real software behind it, that hey, this is definitely not a meme coin. Like, when I buy a Dogecoin, I'm definitely buying a meme coin. When I'm buying a Pepe, I'm buying a meme coin. When I'm buying XPX 6900, which is shilled by Murad, I'm buying a meme coin. But when I'm buying Cardano, or when I'm buying an XRP or a Solana, I'm definitely not buying a meme coin, because there's a running blockchain, there's a business, there are apps which are deployed on top of that network. So if they can sell the underlying equity and basically just take away all of the proceeds, what's the point of funding these networks? And so this has broken that fundamental concern that everybody had. But because crypto was a much smaller sector until 2024, 25, there was never really too much interest from the institutional side, especially from an M&A perspective. But that has now changed, which is now clear. And because these M&As are now happening, these so-called utility coins are showing their true colors. So it's an interesting change that has happened in the markets, and something that we ought to be aware of. There is another game that is happening, and that is known as equity tokens. And what basically an equity token does is it or a tokenized equity. What this means is, let me find out where is it. I think I had it open somewhere. Just one second, guys. Okay, so uh, damn, I have so many tabs open. Whew. Okay. Come on. Yeah. Okay. So this is a tweet by Grant, who is the founder and CEO of Blockmains, and he says that a major trend going forward will be either no token or tokenized equity. Anything in between will become uninvestable. So what I'm going to tell you is, and this is me kind of peeking my, uh, trying to peek into the future, and I feel like. We've already we are already hearing this conversation that the next meta is going to be fundamentally driven coins, which is basically the revenue meta. What this means is only projects which are actually making money selling a real product in the market and not some kind of a ponzi, and who have a very clear pathway to align the upside that they are creating by selling their software, or by having users pay for using their product, and capturing that value to the token. Those are the ones which will see some kind of a cycle where of demand. And when that happens, there's going to be a very clear divide, as Grant is outlining, that those tokens are probably going to see bids from investors, and everything else would probably just go to zero. And so one of the things that are emerging, which are showing an early use case, are tokenized equities. And so what is a tokenized equity? Basically, guys, it's what you know as equities in the real market. We basically use those equities, we deposit them with the depositor, and we issue receipts on chain against them, which kind of maps them. It's like a derivative, but it has certain protected guarantees, right? And these are called tokenized equities. And today we have all of the major tech stocks. You have Apple, you have Amazon, you have Coinbase, Circle, Google, Tesla, Microsoft, Meta, all of these equities, they are today listed, they are today tokenized and are available to trade on chain. And you can already see, across the base, like Tesla is one of the most held tokens on a blockchain. So this is still kind of interesting, although the legal, the regulatory and legal protection around on-chain equities is still not clear, but at least in the way that institutional adoption is happening and very clear um, direction from the SEC that okay, eventually everything is going to be tokenized. So they're probably thinking about making rules, but this is probably one of the ways where crypto companies would, instead of issuing tokens, would be compelled to issue on-chain equities, which carry the same rights that equity shares in the real world do. And unless this happens, it's going to be an extremely difficult, proposition. The other solution is what MetaDAO is building, and I feel like MetaDAO is a very cool experiment. If you go and explore MetaDAO, let me open it for you. I am an investor in a bunch of these ownership coins, and I'll tell you why I bought them. And I think they're doing pretty well. One of the reasons is because MetaDAO has an embedded ownership structure. So every time a coin is launched, and you can already see that almost 25, $26 million has been raised through the platform. You have projects like Solomon, they raised 8 million. You had Avicii raising 3.5 million, Umbra raising 3 million, and they're all building different kind of applications. Like Avicii, they're building a distributed internet banking infrastructure. Solomon is creating a new digital dollar on Solana. Umbra is creating privacy infrastructure for trading and for payments. And so when I buy these tokens, right? When I buy these tokens, there is a very clear alignment between the token holders and the project owners, and the money that goes into funding this project actually goes into a DAO, and no money can be withdrawn by the founder unless it goes through a governance vote. And that's the power of MetaDAO. I feel like many of these projects, as you can already see in a down market, when Bitcoin is down 8% in the last month, you can already see all of these projects are doing fairly well, or even their corrections are not as crazy as some of the even larger utility projects. So this is where we are in the cycle, guys. I know this is not good for your bags. I know many of you are very, very concerned, but there are innovations, there are solutions out there to counter what has happened with Axelar today, what has happened with the Tensor token holders, as well with the Coinbase acquisition of Vector, what has happened with Padre token holders, with Padre being acquired by Pump Fund. But this is where we are. Crypto is the Wild West, and as investors it is our responsibility to keep ourselves knowledgeable and informed about these changes and position accordingly, because that's how you create meta. That's it, guys. I hope you enjoyed today's video. Signing off.